So it's Tuesday, December 20th, 3:23 a.m. And as you can see here on the euro, we've had a little bit of a move up here. And we have come into the top of the range here. So this is an hourly chart. You can see for the last about 5 days or so, the euro has been contained within this range pretty nicely. And it's been bouncing back and forth. So what we'll do is we'll move to a 15-minute chart, and we will look to find an entry at the top of the range. Let's go back to an hourly chart real quick. I want to point out a couple more things here. So you can see the overall trend has been to the downside, and we have been able to maintain these series of lower swing highs and lower swing lows. So as long as the market doesn't breach the high point through here, the swing point through here, I'm going to maintain a bearish stance on the market, and in doing so, I'm only really looking for shorts back to the bottom of the range, because from what the market has shown us over the last few weeks, really, that is where the interest lies. There's a lot more supply here than there is demand. So anyways, looking at a 15-minute chart, this line going through here is a level that has been tested many, many times. So what we can see is, starting off on the left side of the chart here, this is back about 5 days ago. You can see price, oftentimes will rally very hard up into this level, and then it will sell off. And the one exception we had was this right here. However, you can see as price moved through, just as quickly, the buyers really just took the floor out. So anyways, as we're coming up into this level once again, and we're putting in a reversal bar right here, this 15-minute candle is an inverted hammer. The candle itself poked above the top of the range there, and then the body closed inside the body of the prior candle. So when that candle closed, we went ahead and took a short trade, put a nice stop above the high there, and for the target, we're looking for this level down here. So the risk on this trade is approximately 14 pips, and the target on this trade is approximately 28 pips. So nice 2-to-1 risk-to-reward ratio. So we have the trend in our favor. We have the risk-to-reward is in check. And we can go ahead and make a quick check on the news here. You can see here the next important news comes out at 6 a.m. Again, that's for the Canadian dollar, so we shouldn't expect too much of an impact on the euro. For the U.S., at 7:30 a.m., we have building permits, and then that should be pretty much it for the day, really. Again, we have some New Zealand news that shouldn't be too much of a factor. So it seems to be pretty clear in terms of the news aspect. So at this point, we've got to enter the trade. Stops are set, targets are set, and that's the game plan. So one thing I did here was I entered right at the close. One thing I did differently was put a limit order in at this level through here, and that would have saved me about 4 pips or so. So, there's always a trade-off between getting in right at the close and also waiting for a pullback. In this case, I think that getting in was not necessarily a bad decision. If we look at some of the price action more closely, you'll see that oftentimes we do push up a little bit back into this level, but there's been a few times, namely this original spike through here and this one through here, where we only really tagged this level once. So by paying up a little bit, what happens is, yes, we're getting, not the best price, obviously, but there is enough reward in this trade to justify taking a little bit more risk. All right, so as long as we maintain 2 to 1, we're doing okay. Reasons not to take this trade, I guess, would be just simply the fact that there's a little bit more room top of the range here. If price does decide to push up higher, I will likely get stopped out because this range is a little bit wider than I would like. In fact, we have a couple pushes to the top of this range here, and that is just where my stop is setting. So there's a couple options there. One would be simply just to widen out my stop, and the second would be to just if I get stopped and price develops here, then re-enter. But because I've already taken this trade, I'm going off this price action candle right here, so we'll see how this one goes. But that might be something to monitor. Just watching how price reacts, or if indeed we do go through here, is the better trade indeed to short the extreme level as opposed to trade the price action at a relative high. So we'll find out soon enough.